Welcome to the Perpetual Investor. Today, we are not talking about getting rich quick. We are talking about the sheer, unstoppable mathematical force of compounding. Albert Einstein, arguably the greatest mind of the 20th century, reportedly called compound interest the eighth wonder of the world. He added, "He who understands it earns it. He who doesn't pays it." Human brains are wired to think linearly. 1 + 1 = 2. But wealth isn't built linearly. It's built exponentially. Compounding is the process where your returns generate their own returns. It starts as a slow drip, a seemingly insignificant snowball, but over time, it becomes an avalanche. It transforms investing from a game of chance into a perpetual engine of wealth creation. If you think this is just theoretical math, let's look at the architects of modern wealth. 4 legendary investors, all utilizing this exact same blueprint. First, Warren Buffett. People focus on his stock picks, but his true superpower is longevity. Buffett bought his first stock at age 11. Today, he sits on a fortune of over $100 billion. But here is the secret. Over 90% of his wealth was generated after his 65th birthday. That is the tail end of the compounding curve doing the heavy lifting. He didn't jump in and out of the market. He let the snowball roll for 8 decades. Then we have Shelby Cullom Davis. Starting in 1947 with $50,000, he didn't chase the hottest tech stocks of his era. He bought boring insurance companies and held them. By the time he passed away in 1994, that $50,000 had compounded into nearly $900 million. He didn't trade. He allowed the fundamental growth of those businesses to compound within his portfolio. Next is Philip Fisher, the pioneer of growth investing. Fisher believed in buying outstanding companies and holding them practically forever. He bought Motorola in 1955 and held it until his death in 2004. Almost half a century. He understood that finding a great compounding machine means you rarely, if ever, interrupt it. Finally, John Bogle, the founder of Vanguard. Bogle democratized compounding. He realized that high fees act as friction, slowing down the perpetual engine. By creating the index fund, he allowed everyday investors to capture the compounding growth of the entire American economy, proving that you don't need to be a stock-picking genius to win. You just need to participate consistently over a lifetime. Now contrast this philosophy with what you see on social media today. Day trading, crypto flipping, the desperate sprint for short-term profits. Let's be brutally honest. Day trading is not an investment strategy. It is casino mechanics disguised as finance. The data is clear. The vast majority of short-term traders lose money. You are fighting against algorithms, institutional capital, and worst of all, your own human emotions. It is a game of luck. As a perpetual investor, you must not rely on luck. You must rely on probability and patience. When you focus on long-term compounding investments, your probability of achieving significant wealth doesn't just increase. It approaches certainty. You are removing the noise and aligning yourself with the structural growth of the global economy. Let's look at the raw data. I want to give you a concrete, mathematical proof of this concept. Imagine a 22-year-old, no savings, starting at absolute zero. But she has perpetual discipline. She decides to invest $500 a month. To account for her rising income over time, she increases that monthly contribution by just 5% each year. Assuming an average historical return of 1% per month, or roughly 12% annually, let's look at what happens. At first, it feels slow. But by the time she reaches 45 years old, still in the prime of her life, her portfolio size crosses the $1 million mark. But here is where the eighth wonder of the world truly shows its power. It took her 23 years to make her first million. If she maintains this exact same system for just 5 more years, by age 50, her portfolio hits $2 million. The first million took 23 years. The second million took 5. That is the geometric magic of compounding. Building a perpetual wealth engine is not about how much you make. It's about how much you keep and how long you let it grow. It requires you to curb the desire for instant gratification. It requires you to delay the luxury car, the flashy watch, and the impulse to consume. The smart investor understands that every dollar spent today is stealing tens of dollars from your future self. Be patient. Be disciplined. Build your engine, and let compounding do the heavy lifting. If you want to master the mechanics of wealth creation, hit the subscribe button. No hype, no gambling, just strategy.